following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Claremont. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. But you're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Yesterday's gone. Tomorrow's not here. What are you doing right now? This market, folks, went to the paint store and got a lot of red. Market-wise, let's take a look at it out here. We have the Dow Industrials down 477, Nasdaq off 113, S&P's down 50, gold contract up $5.70, trading at $13.2720. Silver down 2 cents, $16.39 an ounce. Copper down 2 pennies at $3.02 a pound. Light sweet crude $63.40 flat. Notes and bonds, 10-year note up 18, 120.17. 30-year bond up a full point, plus 11 ticks, 144.27. King dollar up 81 ticks, trading at 89.450. The euro is at 123.09 to $1. The yen is trading out at 105.5 to $1. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. When we look at percentage-wise out here, folks, the good old Dow Industrials are down 2%. You get the Nasdaq down 1.6. S&Ps are off 1.4. And we just missed being down 500. More than likely, it's going to hit that 500, I suspect. When we take a look at that Dow, it's test. The first test has just been when I was just getting on the air inside that S&P. We'll see how this is shaking out right now. To me, right now, this is kind of the bottom of this range. The first time we just came into it, the first 10-minute bar, doesn't have enough juice to bust it down. This is kind of it for today. So you get the range, the top of the range in the S&P right now is 26.91, which is going to be interesting watching it to close. I don't expect we're going to get there, but I do expect we're going to get somewhere about 26.81, which is another 14 points up from where we are. Dow Industrials, that little baby wants to tag that at least to be down 500 at some point. There it is. There she is. Okay. So we're down $500 inside the Dow at 24,178. And with the Dow Industrials going after, folks, actually, oh, there we go. 24,000 just blew it away. So Dow Industrials was the first indice down into your March 2nd low. Okay. You have two high volume lows. March 2nd is one of them. Dow just finished it. The larger one, of course, is on February 9th. That's bottom line. What we have now is that you're into it. You know, we'll see where we close out. Bottom line, I expect you're going to close probably, yeah, you might close above it a little. Bottom line, though, we have volume behind the move here. This will build more cars, get down into this February 9th level. If we go into the Dow Industrials and we take a look at the movers out here, there's not one Dow stock that is in the green. Taking it south, of course, we have Boeing. Boeing is down, taking it 87 points south, 3M 54, Goldman 49. You go on and on and on. Inside the NDX 100, let's go take a look at the NDX 100. What do we have with the NDX 100? NDX 100 right now trading at a price point of 67.34. You're March 2nd low, high volume low is 66.45. The high of that low is 68.20. So you can see what's going on there. We're into the high of the low and the NDX 100. They'll build some more cars, trying to get into that low. I expect we're going to see it, and see it pretty quickly, meaning next week. We go take a look at the 3 Qs. What do we have with the 3 Qs? 3 Qs are down with 48,000 shares. You took out the low of March 2nd. Now, what's intriguing here about the 3 Qs is this. We have light volume on the 3 Qs, so this thing wants to bounce. We're taking out 71 million shares. They're not going to do 71. We're going into 57, which is the March 2nd low, and then you're coming into like 105. So I expect you're going to see the Qs will probably be, they'll bounce. If we go over to the small caps thus far have been the strongest in a bad market. Small caps right now, the IWM is down $1.74. You're at the Monday low, which is 154.45. That being said, you're 18 million going into 25. So bottom line, you can expect we're going to get some kind of a small bounce out of that too. Bottom line, let's go take a look at volume in the context of how we're coming into this in the indices. So we're going to come into this with volume. Well, it's going to be a close call, actually. We get 469 million right now. This will push maybe. It'll be going to be kind of hard to hit 800 million, actually. And if that's the case, then, which would be pretty wild, then we would get a bounce on a Friday, which is, by the way, really unusual in a down week. NASDAQ Composite, that's coming down with volume. 1.7692 million right now. That'll come in with about 2.2 billion as we come into that closeout here. Some of the higher volume stocks that we have happening, you have Bank of America is down $1.21. Facebook's down $3.99. You get Advanced Micro, that's strong. It's only down 17 cents. Intel's off 40. You get Citigroup down 247. If we go over to, let's go take a look at a few of these financials. XLF. Yeah, so that's blowing away your March 2nd swing point. And it's good. This one's going to be a close one to see whether they get the volume or not. 56 million shares. We get 56 million right now. You're going into 78. That might not get it. Bottom line, though, wide open still, your high volume low from February 9th. The high of that low is we are already into it. Not a far amount into it, but you're into it. And that in itself is a big heads up. Let's go take a look at, we come back, we'll go take a look at JP Morgan. Right now we have the Dow Industrials trading down 514. NASDAQ is up 123. S&Ps are down 53. Stay right there, folks. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow Industrials right now down 550. You get the Nasdaq off 131. S&Ps are off 57. And percentages out here, what you have, folks, you have the Dow down 2.2, Nasdaq off 1.8, S&Ps off 1.5. Let's go over to our man, Mr. Andy Hecko, as he do each and every Tuesday and Thursday. Don't forget, folks, Andy's got a great show right here every Tuesday, Thursday, 5 to 6 Eastern Standard Time. He also has 2 great newsletters. He has the Daily Essentials, which is his daily newsletter. He has the Technomental Commodity Report, which is his weekly newsletter. You can take a look at both of them. Get them for 30 days, money back guarantee. The way you do that, go to TFNN, go to newsletters, either trading or investment newsletters. Take a look at them. Andy Heck, what's going on?
Hey, Tom, how are you?
Doing great, man. Yourself?
Doing good, doing good. Lots of action in markets, huh? Tariffs, interest rate hikes, all the stuff. But I thought the interesting thing after the rate hike yesterday was that gold and the dollar did what they've been doing after every interest rate hike. They go in, the dollar goes in rallying, the gold goes in dipping, and as soon as the announcement comes out, the gold goes up and the dollar goes down.
And bonds went to the moon, man.
yeah, exactly. It's, very, very interesting kind of pattern that's developed here in markets. I think one of the interesting things we're seeing here, we talked a little bit on Tuesday when we got together that oil is really suffering from the political factors here, more so than anything. And, I want to show you the Brent WTI spread has really moved here. We were down in the beginning of March to under $3 premium for Brent over WTI. We're now at $4.60. And when it comes to gauging political risk in oil, this is the spread I like to look at because, as you know, more than half the world's crude oil reserves are located in the Middle East. 2/3 of the world's consumers use the Brent benchmark as a pricing mechanism. That is likely to change a little bit because of the increase in U.S. production in the years to come. But still, 2/3 is about the number that prices off Brent. And when Brent goes up, when the Brent premium goes up, it tends to be during periods where the market's nervous about what's going on over there in the Middle East. And the Saudis in the U.S., preparing, I think, to basically take on Iran in the coming weeks, and I think that is fostering the strength in crude oil. Now, there are other things going on there. Certainly, product prices are strong. You got the gasoline crack spread back over $20. You got the heating oil crack spread at around $19.40. So product prices are doing well. We had some significant withdrawals from inventories this week. But, the dollar and interest rates are really not affecting crude oil prices here. It's really politics that are in play, and crude oil is a very political commodity.
Oh, there's no doubt, man. There's no doubt. When you say that you think Saudi and us are going to take on Iran, what do you mean by that?
I think that the president is going to decertify the nuclear non-proliferation agreement, and that's going to start make tensions in the Middle East a lot higher. That's what I mean by that. So that's kind of what. That's what, it's not what I think. That's what the oil market's saying on the Brent WTI spread, really. So, and that could lift WTI crude oil to $70 a barrel or even higher, If we
if there's trouble, in a second, right? That's
right. We look at a long-term chart here. We're into kind of uncharted territory. The last level of resistance was 62.58. Now we're into this kind of price where the price dropped from like 107 in June 2014 all the way down to $42 in March 2015. We're kind of in that zone here. So there's a lot of blue sky. The technical resistance at 66.66, while it is an ominous number, is not like a line in the sand for crude oil on a long-term basis. You really have a lot of room here to move if things start going. You know what I mean?
Yeah, and as Andy's talking, so what it is, folks, and it's because we came down so fast from 107 in June of 2014. There's, when you come down fast, once you start breaking through that area, and through that area is over $63. Well, guess what? You can go right back up just as fast, man.
Right, and you know that the crude oil market is always susceptible to big price spikes when there's problems in the Middle East. So, that's what we're looking at here. Now, my gut is telling me we're at the top end of the range and we should come back down to $60. The XLE is saying that, but then again, the beta of the stock market on the XLE is pretty high here, and the stock market's not looking good. Actually, the only area of the stock market that I think looks pretty good to me, Tom, is the XLF, is the financials, because higher interest rates mean bank earnings go higher. And the bottom line... The bottom line for bank earnings is they got tax reform, which is working in their favor. They got fewer regulations, and they got higher interest rates, and that's going to print money for the banks.
Well, yeah, you couldn't tell it today. They're getting smoked with volume. They're selling them down big time.
I know. Everything's getting smoked with volume today. Everything's getting smoked with volume today. No question about it. But gold, on a day where it could be a risk-off day, gold's holding nicely. I think we could be coming into a very interesting Friday. Tariffs on China are a problem. It's a problem.
And what's going to be intriguing here, folks, and what's going to be intriguing is that we won't know for 15 days of what is going to be taxed. That's the real bottom line. So
volatility. And quite frankly, what you have to realize when it comes to tariffs is commodities are ground zero because commodities are the things they're slapping these duties on.
Well, what would happen, I believe what you're saying, is that as a measure from the other countries that we're slapping tabs on, the bottom line is if they slap tabs on our agriculture, the farmers are going to go out of their minds.
Right. And look, we did steel, we did aluminum. And if there's retaliation, you're going to see a lot, especially in the soybean market, you're going to see it. China buys 65% of U.S. soybean exports. And soybeans have come down recently. And, we could be left holding the bag. Now, Mother Nature could play some really funky tricks. The U.S. is the world's biggest supplier of soybean. And people around the world need to eat, tariffs or no tariffs. Now, if the soybean crop, we know the soybean crop from South America has been pretty poor this year.
Okay.
If our crop is decent, look, you got very captive customers out there. So, the weather could work for or against the U.S. here. But the bottom line is all of this stuff leads to high volatility. Whatever we slap tariffs on is going to, in some way, it's whether they're manufactured goods, they come from commodities. These are the raw materials that make all these things. They're going to affect prices. Look, in a free market, we look at commodities prices, Tom, on a supply and demand fundamental basis. Technicals are really important. They tell us where the investment dollars are going and all that kind of stuff. But when it comes to supply and demand, tariffs distort the whole picture and can cause crazy volatility. They're like subsidies. Subsidies cause distortions. Tariffs cause distortions. So expect lots of price variance.
Tariff is just the opposite. A subsidy, you're giving people money. A tariff is a tax.
But both distort the free market.
Yeah, except you're going to pay for the tariff.
Exactly.
Instead of getting paid. Stay right there, folks. Andy and I are coming right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow right now down 568, NASDAQ off 134, S&P's down 58. Some of the commodities out here, you get sugar up 0.8%, wheat's up 0.5%. Hogs are down 2.2. We got crude off 1.2. We had natural gas out here today that down, what, 1%, 261.
It's ugly out there, Tom.
I'm sorry, what?
I said it's ugly out there. It's ugly. The stocks are ugly today. Now, listen, they got interest rate hikes they're facing tariffs, a lot of uncertainty, a lot of political uncertainty. So hey, not a surprise. The stocks hit a speed bump in February, and that speed bump is still in the market, no question.
Oh, big time. Well, listen, the Dow Industrials are already down. If we take a look at the Dow right now, so, yeah, the Dow blew away the March 2nd swing low, which is high volume, 24,200. You're already into the bar from the 9th. And we're going to close in that bar like 150 points. The top of that bar is 24,382. We're at 24,098. The bottom of that bar is 23,360.
And we're going to have, since we're not going to know about these tariffs for 15 more days, we're going to have 15 days of very bumpy markets. 15 days of volatility, I would think. I mean, hey, I think volatility, big price variance is here to stay for a while.
Yeah, there's
that's
no
how
doubt.
I feel. Yeah,
I agree.
Listen, so you mentioned natural gas. Let's talk a little bit about that.
Yeah.
Natural gas markets basically saying to everyone, let it snow, we don't care. We're just going to sell. The bottom
Pretty
line
intense.
today, 86 BCF withdrawal. We're at 1.446 trillion cubic feet. That is the lowest. We just went through the 2015 lows in inventory, which were at 1.468. We will definitely have another draw next week because it, snowed like crazy in the Northeast this past couple of days. It's still cold there. Natural gas, 261.20. Just not looking at the weather, not looking at spring, dreaming of spring. That's what it's doing, and dreaming. The important level here, 256.50. We're about 5 cents away from that, and that is critical support. Below there, 252.20 is the continuous contract low. The thing don't look good.
Pretty intense, man. And what's intense is that, this thing hasn't been able to get off its low for such a long period of time, right?
Yeah.
I mean, we were through the winter, right? And, guess what? You just didn't get the movement, man, right?
Well, I'll tell you this. One of the big demand verticals now for natural gas is LNG shipments, and a lot of them are going to China.
Okay.
And, we could see the Chinese buying lots of Russian natural gas and avoiding U.S. natural gas based on tariffs. So that could be could be one of the reasons.
Isn't Russian natural gas, I mean, they don't sell to Europe cheap. They're not selling at $3.
Well, you know what? They would much rather see. Well, we don't sell at $3 either. The transportation cost is much higher. And remember, there's it doesn't have to go by it could go by pipeline to China from Russia. So, we'll see what that brings. But certainly that could be a factor weighing on the natural gas market. But Tom, you know as well as I do, this is a trading sardine, and the bears are pushing this thing. No question.
Trading sardine.
Trading sardine. Trading sardine. Looking at the other markets here, commodities are quiet today. All the action's in stocks. The dollar, the dollar is, to me, the dollar's in year 2 of a 7-year bear market. That's what I'm seeing in the dollar. The dollar shows itself every time there's an interest rate hike. The gulf between U.S. and European rates just keeps widening and widening and widening, and they keep selling the dollar on every rally.
Yeah, and if we look at those rates right now, this is what you have, folks. Okay, so the 10-year in the United States is yielding 2.8. In France, check this out, 0.7%.
Yeah.
In Germany, 0.5%. So you can see our rates are still dramatically higher than Europe.
And what that tells us, Tom, it reveals just how weak the dollar is.
Right.
When the ECB eventually decides to raise rates from negative 40 basis points in the short term, the euro currency could explode in this environment because the bottom line is the dollar, it's like the emperor has no clothes. Every time we raise rates, we rally a little bit into the rumor of them raising rates, and then when the act happens, boom. And yesterday Powell said, hey, they're projecting they're adding another rate hike in 2019. They're adding another one in 2020. The gradual course will continue. We will continue to see higher rates in the U.S. And the bottom line, unless something crazy happens, which is always a possibility, by the way. But the dollar continues to reveal its bearish nature here. And look, from 1985, for 7 years we went down. Then we went up for 9 years, down for 7 years, up for 9 years. That brought us to 2017. This is a pattern that's been in place for 33 years. And the bottom line is we're only in year 2.
Well, what's going to happen, just in the aspect of the tariffs alone, folks are going to need less dollars. So that's a
right.
problem. That's a little problem child too. Right.
You mentioned that when Bush put those tariffs on back in, what was it, 2000? I forget
2001.
the year.
2001. Dollar went from 121 to 80. Right.
Bingo.
Yeah.
Listen, I expect to see this dollar index a lot lower, and that is very bullish for gold, in my opinion.
Yeah, you know what's intriguing, it actually should be bullish for the equity market, but you can see that the move is happening too quick. And equity markets can't stand fast moves, man. That's the bottom line. So
yes. Yeah, equity markets like slow and steady, no question about it. But, listen, equities are facing other things other than interest rates and tariffs. The equities are facing political uncertainty. And equity, quite frankly, a lot of the valuations very juiced from last. We went up on the S&P 500. We went up like 60% from February 2016 till January 2018.
Oh, yeah, no, big numbers,
60%,
right?
60%, that's severe. I mean, those are some juiced stock prices.
Oh, there's no doubt about that, man. And we've done this before, folks. But if you take a look at this, if we just go from, because we hadn't had a correction in so long, if I put this back just on a monthly basis, what you're going to see is that you could look at this later and on a monthly basis and say this is not even a correction. Now, if you're a believer in just percentages and retracements in general, a 0.382 retracement in the S&P, which is a normal retracement in any bull market, would get you to 2467. A 50%, which is, a normal retracement, is 2442. That's, 220 points down from where we are. So.
And on the S&P, what is that on the Dow?
On the Dow, that's 2,500 more points.
Yeah.
And of course, we're going to do 600 down today. That's what it looks like. Yeah, we're 597, 600 now. So
amazing.
Okay, brother. Well, listen, we look forward to the show at 5 o'clock, man. Appreciate it.
Thanks a lot, Tom.
Okay, have a great one. Have a safe one. Andy's going to be coming up at 6, folks. At 5. At 5. Sorry, 5 to 6. Stay right there, folks. Come right back. Dow's down 592.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow's down 623. The Nasdaq's off 151. S&Ps are down 63. And let's go over and take a look at some of the higher volume stocks out here today. You have, well, actually, let's start with Facebook. So we know Facebook has been down, big volume. Yeah, this is toast. So we go down from 185, we're at 165. Facebook's has already blown away its February 9th swing low. We pull this back, and what you're going to see, yeah, this is making its way down to this 151. Right now you're at 165.70. And let's see when Zuckerberg is going to get called in here. Let's see what they say. So Facebook's co-founder has been called to appear before a House panel. As revelations that data from millions of users was obtained by the consulting firm. The House Energy and Commerce Committee said in a statement Thursday, Zuckerberg, who said he's willing to testify about the episode, Facebook representatives left many questions unanswered during a staff briefing by company officials yesterday. Yesterday. So they had Congress had a meeting with the staff, and bottom line is that Facebook knows exactly what they did, folks, and are doing. It's going to be intriguing when he has to get under oath, if that is the case. But as you're going down here and I'm reading this, it's not like we have a date that's set. And it seems like each and every time that they try to bring anyone in front of Congress, we'll see if they get anything done. You go take a look at the one of the biotechs is getting hit out here pretty good. You got ABBV. So this baby here, they research, develop pharmaceutical products. The low for the year is 63. The high is 125. This is down $14.50. This came down in spades. I already took out the February 6th swing low. Let's see what this is all about. So it looks like, okay, so their Rover T results were basically negative. Yeah, so bottom line, if I bring this in, pull this back a bit. Interesting. So this is a one-way shot. We were at a price point of 125 2 months ago. You're at 97 right now. And the way that what's going to be intriguing here is that coming into a Friday in a down week, it's it's very unusual that you do get a bounce going, but the way this market is closing certainly doesn't look like it's going to happen. Right now, you get the Dow almost down 700. When I started, it was down 498. S&Ps are off 70, 2648, ESM 8. ESM 8. Well, that's a big bar, man. This is definitely a big bar. And there's volume behind this bar. Let me pull this back to 2 days. Yeah, depending where, let's see, 2708, 30. Yeah, see, now this market right here, this where we are right now, this is about as extended as you can get, but we'll find out what that means. Each and every point here, when you talk about some news after the close out here today, I expect we're going to get it. And what I mean specifically is that when you get the S&Ps down 74 and the Dow's down 726, it's probably going to try to make it down into the price point of, hey, why not shoot for 800? Started off at 5, you're at 750. Let's go to the NQs and take a look at the NQs. Yeah, so the NQs blew away its swing point and on volume. The NQ, this is going to be intriguing. So we just blew it away on this bar, and it's blowing it away on a big number too. 123,000 was this morning at 11:40. We're already at 16,000 versus. Yeah, we're already at 16,000 versus 12,000. So there's some juice coming into this market. 2645. Percentage-wise out here, what we have, you have the Dow right now down 2.9, NASDAQ off 2.3, S&P is off 2, and the Dow looks like it's going to go right into. Now, this is a heads up in general for the. Yeah, we're into this February 9th level pretty deep. So we hit 23,938 and 23,360. Oh, that's a long way down. We still got a long way to go here. So the low of February 9th, this is where the danger point comes now. So watch this. You know, you build some cause, you gap down tomorrow morning a bit, then go sideways, and where the risk is going to be there, you go sideways before you hit the lows of the 9th. You take the lows of the 9th, basically you blow those away, and then that sets up the next leg down in the marketplace. You know, the first leg took you down about 3,000 points inside the Dow Industrials. But that's the way that this thing is shaking out right now. You know, if we do look at the, let's go to, I want to go to JP Morgan for a second, because the financials, for the aspect that, you know, rates are supposedly going up, the financials are getting hit, and they're getting hit good. They're taking swing points out. They're taking swing points out with volume on an ABC structure down. Yeah, JP Morgan's down almost 4%. You're taking out your March swing point. That's going to have the volume there. We're at 16.9 million. That's 18 million. And you're basically into these lows, and you've got accelerated volume. So that little baby is saying lower prices are coming at us. If we go take a look at Bank of America, where Bank of America was hanging up pretty good at those highs yesterday, that's down. Oh, look at they really unloaded on Bank of America. So that's down $1.35. Volume is already blown away. Well, no, it's blown away. 94 million versus 82. So now it's wide open. Here's the February 5th level, and that's $29.15. Right now you're at $30.57. Gold is basically holding up. If we go to the GDX, what you also have out here, which is pretty wild. I mean, because we've seen when markets go south that the gold market couldn't hold up, but it's holding up. You know, we went up yesterday on the GDX. You went up 77 million. You're pulling back with 21 million. That's a nice setup, a higher price. Dow Industrials right now down 679. Nasdaq off 166. S&P's off 70. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Let's go to our man Charlie in Massachusetts. Hey, Charlie, what's going on, brother?
Hey, there was no nor'easter that had any impact up here.
Oh, that's a good thing, man.
It is.
Totally. You got
spring is
hammered
here.
4 in a row, right?
Well, but really, I'm looking out here in Framingham, and the streets are totally bare. No snow.
That's awesome.
Driveway, no snow. It's a beautiful thing.
It is a beautiful thing, man.
Yeah. Well, listen, good to hear your voice.
You also,
good to
man.
call in.
Totally.
Of course, I need some help.
So, TVIX, right? Yeah.
Yes,
So,
sir.
So the real question is, you hold it overnight or not, right?
Yeah, I mean, it's, yeah. I mean, I think it's going to go to 14, but it might take a week. I don't know.
Yeah, no, I think you're right. I mean, the bottom line is you get your swing point out, you got it with volume, the next stop is 11.18, and you could be there tomorrow. Yeah, I mean, you know, and you get the high volume. I mean, this thing up here at 15.47 is there, you know, so the real question is what happens at the TVEX, folks, is that any type of bounce, it will pull back immediately, you know, so that's where it's like, you know, you can be in the money in a second and out of the money in a second. But listen, the way that this market is trading, you've taken the swing points out, taken them out with volume. You have ABC structures on the way down. I'd hang tough, man. You know, February 9th's coming at us, man.
In what I wasn't listening to the show earlier. I was on an online meeting with a prospect down in Florida, actually. What's driving this today, Tom? Any news?
No. You know my take on the market, Charlie. I thought, you know, this is the first leg down. February 9th was real. Bottom line, you know, you do a counter trend bounce, you have nothing. It's going after it, man. It's
got it.
We haven't had a correction, man. It's like time for a correction. Selling.
Okay. Well, you're the man.
Brother.
Thank you.
Have a great one, man. Have a safe one. Folks, stay right there. We got numbers coming in after the close. Dow's down 718. Nasdaq's off 174. S&Ps are down 73. Come right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful day. Got our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay. And
it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. The market today went to the store and bought some red paint. Market-wise, let's take a look at it out here. We have the Dow Industrials down 724, NASDAQ down 178, S&P's down 73. Dow Industrials, that's 2.9% move on the way down. NASDAQ 2.4%, S&P's 2.7%. Gold contract up $7.40, trading at $13.28 an ounce. Silver, $16.38 an ounce. Copper flat, $3.01 a pound. Light sweet crude down. Let's see, we're down about $1. We weren't down much. Light sweet crude, down 92 cents, trading at $64.24. We get over to let's go take a look at the note and bond market. So, notes and bonds, folks, bottom line, go top side. Once again, the correlation here is kind of back to what happens when you get down markets, meaning specifically when we go back to the February 9th level, the first leg down in this market on February 9th, well, from the 1st to the 9th, you had markets going down, bonds going down, yields going up. That's what really started the first downdraft, the first selling. You go back topside, do a counter trend bounce, have light volume. The bond market at that point had gone sideways for a full month. You know, the low in the bond market was February 15th. That being said, what ends up happening is that on the March 1st, we had a big sign of strength inside the bond market. Pulls back again with lighter volume. Guess what? You get another sign of strength. This is saying that the 10-year, which is at 120.18, that wants to run up to the 122.02. We take a look at the yield out here. What you have with the yield, bottom line, is that you're yielding 2.824. We take a look at the 30-year. What do we have with the 30-year? 30-year was up almost a 1.5 today. You did 437,000 contracts, big number. You got into the swing point, monster volume into that swing, so you get 40. Yeah, you get an ABC up. So 30-year, that wants to run up to 146.21. The real kicker is that when you get up to those levels, we'll find out if it has more juice at that particular time. King dollar. What do we have with King dollar? King dollar continue. Folks. Sorry about that. So I was at King dollar, I think. So let's talk about King dollar. King dollar right now, $89 and 42 cents. Bottom line is that you did 26,000 contracts out here. You have a lowest swing point. That lowest swing point is at 87,830. That's where I figure you want to go to. That's in a smaller basis. The larger basis, folks, that King dollar has been on a large ABC structure on the way down. If we take a look at this, just to review exactly where this baby wants to go, what you're going to see is that King dollar has been going lower since the first week of January of 2017. Broken lows, broken with volume. There's not much holding this. What's holding King dollar up right now are the highs from 2008 and the highs of 2010. That's where it's getting, some support. I suspect, number one, this is the third month we've been here. You're building more cars to get down into this $78 level. You get the steel tariffs, you get the aluminum tariffs. Now the bottom line is that when that was announced, that's the here and now. Guess what? Today you got, they're claiming $50 billion in China goods. What you did do is that, there's plenty of things that China can come right back at in a second. The ambassador was out here today. Let's see. The Chinese ambassador said the nation would return fire on the tariffs as the Donald Trump said that bottom line, we're putting tariffs on them. The quote is, "We don't want a trade war." Well, guess what? They have one. That being said, what that does, it does a few different things. You're going to need less dollars when there's less product. That's the real bottom line. It's the first one. Tax-wise, you know, tariff's the tax, folks. No matter which way, you know, you're going to hear left and right, oh, you know, the country that we're putting the tariffs on, that is what is going to pay them. Guess what? It's not even close. So let me show you something. Last time the tariffs were put on was in George Bush's administration. And when you see this, this is like such a heads up. It's amazing. The tariffs were put on in 2002, I believe. 2001 or 2002, either one of them. We were at 121. You know what we did? Straight down. And this is when Jon Snow was there. And Jon Snow always, I remember this so well. We believe in a strong dollar. We believe in a strong dollar. Well, guess what? We went from $120, 120, and January of 22, straight down too, by the way, to 84. Why? Because guess what? Tariffs, taxes. The amazing part about this whole deal is that we get a tax bill that goes through, so that gets relief for workers, and then now there's going to be taxes, now there's going to be tariffs that are in place. It's going to be huge. And what will happen, you can see with the steel ones, they say one thing, then they're going to basically relieve the most of the countries that supposedly import steel. They're going to be exempt, and you can see today what happens with U.S. Steel. U.S. Steel just went from a high of $47. You're at $34 right now, and you have volume. So it's all show. That's not much. Show, it's one big show. It's the freaking Truman Show, so get used to it, because we're going to be in this for a while. Guess what? Picking your pocket at this point. Dow Industrials down 724, NASDAQ off 178, S&P's off 74. Coming right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go take a look at Nike. Nike just come out with numbers. Nike closed today at 64.42. Bottom line, not doing much. 65.28. That's where it's laying out right now. So let's see. We'll close that one. Close this one. Yeah, that's still pretty much at highs. Pretty wild. Let's go over to our man, Mr. Basil Chapman, as we do each and every Thursday at 20 past the second hour. Now, don't forget, folks, Basil's got a great show right here every trading day, noon to 1 Eastern Standard Time. Also has a great newsletter, The Opening Call. Bottom line, you can come over to our website at TFNN. You can subscribe to The Opening Call, 30-day money-back guarantee. And as you're over there, what you're going to see right on the front page, folks, is that our man, Mr. Basil Chapman, is going to be doing a workshop for all his subscribers. It's real easy to be a subscriber. You just go over there, take it for 30 days. It's a money-back guarantee. You have nothing to lose. As you do that, you're going to see right on the top of the carousel the power of the fourth highest peak in the Chapman wave, the peak D. No one wants to get a D in school. No one wants to get a D in the market. But guess what? The Ds have to come because that's just how it goes. Basil Chapman, what's going on?
In school, I never thought of that. Right. But in the market,
I was going to bring that up when we were on Tuesday, Basil, because you had shown so many of the indices at Ds. I says, oh, man, what a report card that would have been, man.
I know. I never thought of that. That's very good. So this is very interesting because you remember on Tuesday what we were looking at is that there were so many Ds, but we hadn't really seen any breakdown. We had seen some pullback in the Amazons, the Googles, etc. Look what's so fascinating about this. So there's the power of the peak D. In the Chapman wave methodology, we try to identify the lowest low bar, merely count each successively higher peak, and try to get to the fourth highest peak. That's peak D, alphabetized them in sequence, A, B, C, D. You can go higher, but D is very often where other things can happen. That's all you have to keep in mind. Look at this. On the 26th of January at 26,616, there was both a Chapman wave 2-bar reversal, a peak D confirmation, plummets 12% to 23,360. Rallies up, and this is the pattern that I've been drawing for subscribers to show. This is a pattern in my Chapman wave CD, introducing the Chapman wave methodology. One of the chapters, chapter 17, I call the dreaded H, because when this left side low bar gets taken out, it can go down again and start another one until eventually sometimes you can get the lowercase m. So this is what I've been focusing on in all these different charts. And here we are. The Dow is making that H pattern. We've already started a deep roll over to the right side. I've called this an internal low on the 9th of February. I'm expecting that we have to make what I call a residual low. It's like an earthquake and then the aftershock. We still have to get this aftershock with a test of the close to that level of the 9th. Here's the lowercase h again in the weekly chart. Here it is in the monthly. We've just started down. What I'd say is a particular technique that I developed a long time ago. It's called the Chapman wave Roman candle. What it is after a top in any time frame, there's a pullback, but there's a bar that opens, and there's this tiny little wick, and there's a sharp pullback. And then the price looks as if nothing happened because it closes above halfway of that whole wick. But that's very dangerous, because if after that, within 2 bars, this is a monthly chart, there's a shorter time frame with a close halfway into that wick, the lower wick. And I've been talking about this now for weeks. I've been saying, if that happens, what we've got to really look for is if there is a weekly close. Now I have to go because it's a shorter time frame. The weekly close below 24,300 to 24,200 key support. There's a real good chance that we're going to not only test the low, in this case 23,360, but you'll probably break it. So this is exactly where we are. I never expected. I mean, when I spoke to you Tuesday, we were up in the high 2400s. Here we are, under 24,000. Sorry, we were in the 24,800s. So this is very important. Now, if you look at the S&P, the S&P has made a peak D, made a peak F back on the 26th where the Dow made its high. Then it had this arch formation, the lowercase h, goes to a peak D. Look at the sharp pullback. Look at the peak D in the weekly chart. Look at the peak D in the monthly chart. I'm kind of nervous here because this is the first time my monthly charts have started to show some deterioration. So this is what we have for my subscribers to my opening call. We're short the Dow again. We shorted just off the top, and then we turned around the day after the low that was made on the 9th. We went long, then we got taken out for a profit. Now we've got back in right at that high that was made on the 13th. So we've got fortunately they make these ETFs that you can buy. If you've got an IRA or you can't go short or you don't want to go short, you can buy the already made short position by going long. Yes. So that's what we've done. We've gone long. We also went long the triple Qs, and that's, whoops, let me get to the QQQ to show you. Peak D once again. Look at that, right there. We were lucky to short 1 point off the all-time high. And now we've gone from 174 to today's low of 162. That's the weekly chart. Look at the monthly, leg D. So I'm looking at this. I spoke to you the other day about so many of the high techs. Look at Google, peak D right there. And it had what I call this Chapman Wave 2-bar reversal, where the second bar has just a fractional miss off the previous high. And that's turned down sharply. If you look at Amazon. So going through these, all I'm saying is that you don't always know where it's going to go to, but we do have these icons, these levels that you can check out. For me, it's that low that was made on the 9th for the Dow. Looks as if tomorrow we close under that 24,200 level. That's probably what we're going to test. But what's really important about this is the number of different sectors. Look, here's even the SMHs, which we actually are short, has a peak D high, all-time high at 114.55 in the 13th. So my focus is going to be on the April the 3rd, 6 o'clock to 7:30. I'm giving a free webinar for subscribers, and we're going to be talking about the power of this peak D. When does it recycle up? What does it do? In fact, tomorrow I'll do a little bit of it on my show, my Tiger Technicians Hour at noon. But this is a very important period, and I'll be talking about what I'm expecting for the summer.
That'd be cool. Hey, can you come back in this next segment?
Yes.
Because you know what I want to go over the webinar, but I know that you were born in Cape Town. I want to talk about this water shortage, man. It's blowing my mind that, I mean, Cape Town's a really rich place, and how is there water shortage going on?
Can you believe it? Right. Yes, yeah. Absolutely. Sure.
Awesome. You stay right there, folks. Basil and I are going to be coming right back. We have the Dow Industrials right now traded down 724. NASDAQ off 178. S&P's down 74. Nike came out with numbers. Bottom line, Nike's trading flat out here. Let's go see what Micron's doing. Micron. Stay right there, folks. Basil and I come right back.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow finished down 724, NASDAQ off 178, S&P's down 75. And, folks, we're talking with our man, Mr. Basil Chapman. We're talking markets. We're talking, he's going to be doing a webinar. It was 2 weeks from last Tuesday. Check it out on the front page of TFNN. So can we just go through, I know we're going to go through the power of D. If you can just give us a little rundown of what you're going to teach that night, Basil.
Absolutely. So I'm going to move my Cape Town picture out the way because
I want to talk Cape Town too, but pretty intense.
So let me explain some of the things that I look at. I've been getting Stocks and Commodities magazine it's a monthly magazine for, I don't know, 20 years at least. I've never really seen anyone talk about grading each successively higher peak. And one of the most important things about my work is I found a long time ago when I used to hand chart the notation of the Dow and the Nike, the FTSE and the Japanese Nike Dow. I used to notice that at the fourth highest peak, other things could happen. Eventually, I found out you could actually go higher, and I developed this way of looking at it where it recycles. But what I'm looking at here, look, I've got the SMHs here. You see the way the MACD, the moving average, turned down and the stochastic turned down right at that peak D. So I look for the divergences, not just the letter. I'll be teaching in this particular course how you can look at the divergences. And what's very interesting is if you look at if I go to, I think it was, so if you look at the last one, the final high of this SMHs, again, it went to the peak D, but this time, look how quickly I'm going to do a vertical line. Look, the stochastic had already turned down. So I look for those divergences. So what I'm going to be teaching is what can you identify really easy. I mean, there's no mathematics or anything involved. This is a visual thing. You can look at it, and then you can make your decisions. You don't have to say, oh, my God, I'm going to mortgage the house and short everything. No, you say these are the levels to look at, and I'm very steadfast in my way of looking. Has to go under the 9-period moving average, that black line. It should close at least very sharply below, or at least 2 times below it. We've just done that in the SMHs. So it's a very methodical way of looking at the markets. And then I'm also going to be giving my projections for the summer based on these notations.
And folks, it's real easy to come in. Just go over to our website at TFNN. You subscribe for a month. It's a money-back guarantee. You're in the workshop simultaneously. Great deal. So, South Africa, this is pretty intense, folks. If you don't know what's happening in South Africa, they're approaching day 0. And what day 0 means is that they can actually, from major metropolitan city, they're going to turn off the tap water because they're running out of water. This is like a mind blower.
This is the faucet water. Yeah, I mean, this is unbelievable. Not only that, this is on the coast. This is right on the coast. So they were offered, Israel offered them a desalination plant quite some time ago and said, look, you can resolve your problem. That's what we do. We take the salt water, we desalinate it, and we turn it to regular water. You've got all this water. It's just, and they refused to do it. I mean, there were political reasons for it, but they refused to. Now I think they're starting to consider it. That's what I've heard. But I have a good friend who's just returned the last few days. He's just returned from Cape Town. In fact, he spent a month there. He's originally South African. So I'm going to be speaking with him over the next few days because I think he's got the scoop on really what's going on. But as I understand it, just like any place in the world, the very wealthy are able to get their water. In fact, the very wealthy down on the wharf, which is Cape Town and south, this is called Table Mountain, Flat Mountain, with a cable car that goes, the view is unbelievable. You can see the two oceans, the Atlantic Ocean, freezing Atlantic Ocean, and the warm Indian Ocean meeting at Cape Point. And this is the city itself, very pretty city. In fact, my father my father had a woodworking company when we lived there, and they did a lot of the woodwork, because, the salt water does a job on any metal.
Sure.
So they had all these wooden frames for these famous buildings there, and my father's company did a lot of those. They're still there, in fact, I'm told. So, yeah,
That's
so this is
cool.
going to be a big... Can you imagine running out of water?
And so the way this is shaken up, folks, so what they have is that they have their main water supplies are just like we have. You have big reservoirs, and this reservoir is running dry. And when they talk day 0 is when the city itself will turn off the taps because that's it. They just ran out of water.
They just extended it. It was...
They did. They extended it from April to July. But they're saying that, guess what?
It doesn't resolve the problem.
Yeah, it's a heads up, man. It's like, and you know what? There's only 4 million people there, man. Right. So it's really interesting that, water, well, it's in Africa, right? So water's valuable, period. And water's valuable everywhere, man. It's just,
water,
I'm
just thinking, in this country, at some point, we're also going to face a water crisis. The different states are going to say, hey, we want the water, and the river comes through our territory. So, yeah, water is a big deal. So I hope this resolves peacefully.
Yeah, there's no doubt. There's, and, we have one of those plants in Tampa, Basil, that takes the salt water and makes it fresh water.
So the desalination, really?
Yeah, they spent a fortune for it. It's interesting because it was like 20 years ago that they opened and spent a fortune, and people said, they fought about it, but everyone's really happy. Yeah. They're really happy they got it now. I mean, we don't have a water problem because we have what happens, folks, it's really neat in Florida in general. We have an aquifer that is so huge, it's unbelievable. That's where... and there's enough rain here, but bottom line is that...
most of the time you do have rain, right?
Yeah, we do. And the aquifer...
Cape Town used to always get rain. Wintertime is where there's a soft rain that just keeps coming down for a couple of days on end, and I'm really surprised that there's been a drought like that. But this is very serious. This is your drinking. And who's it going to affect? It's not going to affect the wealthy people. They'll figure out some way to get water. It's the poor people. I mean, it's a terrible thing.
Yeah. Well, you have no water. I understand what you're saying. The wealth has an easier shot at getting it, but guess what? If there's no water, man, they just might not be as tough as some of the poor people, and they'll just die.
At the waterfront in the harbor, the very fancy wharf and the waterfront, I believe that they do have a private desalination plant.
Yeah.
And I must tell you, this Cape Town, the Table Mountain, there's a cloud that comes over. It's called a tablecloth, and you can just see it goes over, and it looks just like a tablecloth. And you're a sailor. Anyone who's looking at that tablecloth knows exactly which way the wind's blowing, what it's going to do, the speed. It's fantastic. It's like a weather vane.
Wow, pretty wild. Man. Okay, well, listen, it's always a pleasure. Market-wise, hey, they went to the store and got some red paint.
They definitely did, and I think we're getting close to a bottom. I don't think it's the bottom, but we should have a bounce very soon. Oh, I've got an indication that says within 2 days there should be a 9 to 11 point rally in the S&P, but it could come off a lower low. But there should be some kind of a bounce, a big bounce. We'll see.
Yeah. Okay, Basil, thank you so much, man. Appreciate it.
Thank you very much, Tom.
Have a great one, man. Have a safe one. You know, we go over, you know, GE. We've been talking about GE, folks. It's making its way down there. It's got away from the $14 mark. Now you're at $13.35. Bottom line, you know, this thing is going after this $11 area. And it looks to me, by the time the S&P, which is another probably 4 or 5 days, getting to that February 9th swing low, we're going to see GE laying at $11.35. The real kicker here, if it gets into $11.35, like if I buy $5 coming at you, $5.72. Pretty intense. There, right there, folks.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go take a look at Micron. Micron came out with numbers. Let's see what they're having to say. So Micron closed at $58.92. You're trading, bottom line, flat, $59. Let's see what they have to say here. So revenue, earnings per share, or net sales is $7.35 billion. Their margins running at 58%. Earnings per share was $2.82. It's interesting. The stock's not moving. Bottom line is that the numbers don't look that bad, but they're saying that. So Micron gave a forecast that basically is falling a bit short. Profit excluding some cost for the current period is on 2.83 billion. Will be 2.83 billion on 7.2 billion in sales. Average analyst estimate was expecting a profit of 2.65. So bottom line is that they come in with the numbers. They come in. So let's go just take a look at this for a second. So you're at 59, 58. Yeah, that's good. That's still hanging at highs, man. That's the bottom line. You're at 61. Let's go over to Nike. So Nike also came in with numbers. Nike out here closed at 64.42. That was down $1.93. That's trading up 67.38. So you're up $3. We take a look at Nike. This is these between clothing and sneakers, folks. Guess what? This thing is strong like bull. And this is when you can see just how strong a stock actually is. When we came down, not only on the February 9th downdraft, and on this equity here, February 9th, it got to 62.84. Today you only come down to 64. Let's see what they have to say. So their estimate was 53 cents. They came in with 68. Revenue estimate was 8.85 billion. They came in with 9 billion. Bottom line is that they got it happening. Let's see. Their effective, this is pretty funny. I don't know how they get an effective tax rate of 179%. Well, that's them making something up, meaning making stuff up in the past. China, look at this. This is interesting. I like how they break this out. So watch this with Nike. This is cool how they're breaking this out. Okay. So Asia and Latin America, their revenue estimate was 1.21 billion. They came in with 1.27 billion. China, just China's revenue estimate was 1.23 billion. They came in with 1.34 billion. Emerging market revenue, they expected 2.22 billion. They came in with 2.30. North America, 3.68 billion. They came in with 3.57. So that's interesting. So North America, that market's going down. Didn't make it. The other one's up dramatically, though. Gross margin, 43.2% was the estimate. 43.8 come in. Top line revenue, the estimate was 8.85. It came in at 8.98. So bottom line is that just right across the whole board, they did some action. Let's go over. We'll go over and take a look at SPXS. We had a question in the Tigers Den. We get these a lot when these double and triple levered positions are going to do reverse splits. And what folks want to know, bottom line, is that, should you be trading them when that is happening? So the way this goes, like the SPXS is going to do a reverse 1-for-5 stock split on May 1st. Well, cut to the chase, no, nothing happens. Meaning, what happens is that if you had, bottom line, if you had 5 shares of this today on the 1st, okay, bottom line, you'll end up with 1. And in that particular case, you'd basically be out, and they allocate the price. So your dollar amount is the exact same. Your price is different. You have basically less shares. That's how this thing shakes out. What's going to be intriguing And you know, every time that this happens, I'm always curious as to where these equities actually are. Now, the SPXS is the 300% inverse correlation of the S&P 500. That's what that is. What's intriguing here is that most times when this happens, you get these happening, you know, when they're at a smaller price. Well, here, let me make sure that this is a reverse one. This might not be a reverse one. This might be a, let me pull this down a little. Well, here, I'll just keep going through this. So, because what we do have with the SPXX is this baby right now, it was up $2 today, gets into its swing point, has volume on the swing, meaning the swing we're looking at here is March 2nd. You're at 29.81, you're at 29.68. You get 8 million shares traded. You're going into 8. You know, you're going 8.5 million shares traded, you're going into 8. Next stop up, you know, is February 9th. February 9th is the benchmark right across all these indices. That's how this thing is shaking out. If we go into the VIX and we take a look at the VIX as to what kind of action that we had out here in the VIX today, people are buying insurance. VIX was up $5.48, $23.34. You know, the high, March 2nd high is 26.22. Your monster high up here is the $50 level, 50.03. There's action out here, and so we're coming into a Friday. You got the market tonight, folks, is going to have to digest quite a bit. Here, I want to go over the FTSE first. Now, we've been talking about the FTSE. FTSE gave us the heads up that, number one, you're going to go after the February 9th level. Why? Because the FTSE broke the February 9th level last Friday. Today, another leg down in the marketplace. The 9th, February 9th is 7,079. Right now, we're at 69.52. The DAX in Germany, what the DAX also did out here today, we take a look at this. The DAX, DAX in Germany also went lower. The low of February 9th is 12,000. Today we hit 12,009. It's 12,003. And bottom line, it's going to be really tough to bounce on a Friday. I expect what you're going to see overnight here, we're going to have some heavy futures on the way down. Because guess what? The selling, you got trade wars, you got Chinese tariffs, you got Trump's lawyer quitting. What else you want? There they come, lower prices.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver-producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We had the Dow Industrials finish down 724. Volume-wise out here inside the indice, as we were coming into that lower level, big volume. So we did 949 million shares. That's an indication, folks, number one, that you have the juice on the way down. You have the volume on the way down. You're breaking swings on the way down. Composite did 2.3 billion. If we go over to that Dow and we take a look at the Dow, what I expect you're going to probably see out here, this baby, you know, you're already into the February 9th level. We are only, you're only, from the bottom, you're only 600 points away from it. So you can see this, 724, you're all of 6 hours away from testing that level. Now, how it tests that level is going to tell us a lot. The market's going to tell us a lot. Because if we stop before that level and you stop building cars, you're going to blow it away. I suspect what we're going to get, because of the FTSE and the DAX, FTSE in the UK, DAX in Germany, those two indices have been telling us that we're going south. The FTSE already broke that level, you know, so you can expect this volatility to continue, and we go over and we take a look at the composite, the NASDAQ composite right now. That baby also come down hard with volume. I don't expect the composite to get down there just yet. I do expect to get down there, but we're a long way away from it. The composite I do expect will bust out its March 2nd swing low tomorrow. That's 7,084. So that's about another, well, that's only $80 down from where we are. We went down 178 today. So bottom line, that can get down a lot lower than that. You know, these setups are kind of there, and they're there in spades. That's the bottom line. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking to you right back here tomorrow morning, 8 o'clock. Stay right there. Andy's coming right up, folks. Look at him.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.